Welcome to another episode of the Marketing Measurement Matters podcast. Today, it's not going to be a lot about marketing measurement, but more about AI and the AI bubble, or presumably the existing AI bubble.
Is there a bubble?
Is there a bubble or isn't there? We have some believers, we have some non-believers, and some middle ground here. So we divided up the roles of the skeptic, I think it's Mr. Wiegels, and the AI fanboy, so to say, Mr. Kreinkamp.
Hi,
and
fanboy.
I'm in the lucky middle, so I don't actually have to do a lot. Just listen in and say both sides are probably correct. But who wants to go first? So any intro?
I mean, Janusz, if we can start with the with setting the stage a little bit with that screenshot that we pulled out of the Financial Times article, actually. So we have wildly different projections what AI is going to do to productivity and to the world at large. So on the one hand, so this is economic growth, GDP growth that we're plotting here. And on the one hand, we have a projection that says, all right, okay, we're going to have a Skynet moment. AI is going to kill us all. And a surprise, that's not going to be very good for GDP. Maybe it is, but then, we won't stick around to actually see it. And then we have tech singularity, meaning the end of scarcity. So explosive GDP growth. And for some reason, I think when people say the end of scarcity, they probably also mean that this is somewhat fairly distributed, the resulting wealth that's going to get generated from that. And then we have the messy middle. Janusz, that's probably your projection.
That's me right there.
That says like a 0.2% growth. That sounds pretty German. That's what
pretty boring.
It's pretty fucking boring, and but that's for us Germans here. That's probably still considered good. So we'd be happy to have that.
I take boring. Yeah.
So I mean, of course, we assigned the roles beforehand, but why do we opt for the optimistic scenario? Of course, if I'm going to be presented with human extinction and 0.2% growth and explosive growth in the end of scarcity, I'm going to take that one. I'm going to take the optimistic scenario. So Tim, over to you. You are in the human extinction camp, or?
I'm not on a human extinction, but I mean, at first it's quite funny because this is pretty much the biggest corridor I've ever seen on a prediction, right? This is like 100%.
It's like infinite confidence interval. It's like not even existing, so to say.
No, it's going up as much as possible. I mean, even for the tech singularity, right? It's GDP per capita. The GDP per capita must be skyrocketing if the capita number goes to zero, right? It's not that bad either.
I mean, it's undefined if it's zero.
I don't think it's anyone really consuming anything anymore, but whatever.
No, but I don't think it's going to be. I mean, yeah, the Skynet moment can always happen. I'm always making fun of that myself, but I think what's really more important on the lower side is not the tech singularity and the extinction, but more like what happens when this whole thing bursts, right? Because there's so much happening where people buy from A and A buys from B and B buys.
Wait, we have a chart for that, don't we?
Yeah.
No, this one.
Oh, this one. I mean, this one is really it, right? I mean, the big problem is really right now that I think you can call it circle jerk. I think that's the best possible way of describing it.
Okay, this episode is cooked anyhow because I said fuck once. So yeah, keep it coming. Okay.
Circle jerk is not a bad word. It's much better than the German one. But I mean, the thing is really, OpenAI buys stuff from Oracle. Oracle buys stuff from NVIDIA. NVIDIA buys back stuff from OpenAI. Everyone is investing in each other, right? And the issue here is, as soon as one of these companies start to go down and fail, hopefully it's Microsoft. That would be my inneres Blumenpflücken. But that's not going to happen.
You hate him so much?
That could be a good thing, right?
Why is that? Is it because
is it just because of Microsoft Teams or
the Spange, the helper,
Clippy?
Because of Clippy?
No. I like Clippy. Clippy is, I think, the best AI out there right now. But for my Microsoft hate, it's more about Power BI, Teams, and Excel. I love Google Sheets, but all these Microsoft tools are disgusting. Well, but anyways, if you look at this, if one of these arrows go missing, then money goes missing, right? And the issue is then that if this money goes missing, then in one of the other arrows will also disappear quite quickly. And the problem is really that in the end, it's in German, it's called linke Tasche, rechte Tasche. So left pocket, right pocket. There's like, let's say 10 companies that are really benefiting from this now. but they're also not generating value, right? All of them are growing a lot.
But that's where I have to jump in, Tim. I don't see them as not really generating value.
Yeah, okay. They're generating value, but it's still, they're all reporting growth, but in the end, it's not really there, right? Because it's, yeah.
Well, I have an interesting, I'm going to side with Dr. Wiegels here for a bit, because,
yeah,
I mean,
but you're
how do
supposed
you
to be neutral.
I'm neutral, but I can use, I can basically argue for both points, I think. Yeah. So, I mean, first of all, this is interesting because for a short time after OpenAI announced this this commitment to buy servers and cloud infrastructure from Oracle, Larry Ellison became, I think, one of the richest men, or like became richer even than Elon Musk, just because of the evaluation then of Oracle that went up. So that was interesting. And then another thing that just popped up with Gemini 3, Google announcing that they didn't use any NVIDIA chips for that, but just their own TPUs. And that, of course, kind of like, first of all, Gemini 3 seems to be better, like according to whatever benchmarks, than ChatGPT's newest version. And the second blow that they kind of provided to this circular economy, you could look at this as a kind of a new version of a circular economy, not really sustainable probably, but of course against NVIDIA by not using any NVIDIA GPUs, but rather their own TPUs. So that's, I think, quite noteworthy here in this case. But then coming back to the question, what kind of value is actually being generated here? And one figure that always blows my mind is that amazing GDP growth in the US.
Yeah.
I don't actually know I think it was close to 2% in the first half of
which
25.
is a lot for a developed country like the
which
US.
Is amazingly high in one, like not in 1 year, but like, but 90% or more than 90% of that was due to investments in data centers. And now you could argue, okay, is that like, where's the value created actually in terms of productivity? Like if you look at the productivity of a country in terms of GDP and GDP growth, of course, but like what are these data centers?
But then you're going to have these second order effects, right? So on the one hand, of course, the resulting AI capacity that comes from that, so it's going to make AI cheaper. If you have more data centers, it's going to increase supply. Then you're gonna have cheaper AI, so you can actually do more with it, increase productivity in other sectors with it, and that's the one side. And the other side is, of course, like that money is going into the economy. So that's like that's real estate construction companies, that's contractors, that's a lot of people who suddenly see their pockets getting lined because of this AI boom. So that money, of course, flows back into the economy. Now, one point that I wanted to make is that in previous bubbles, towards the end of it, people were always doing super ridiculous things. Yeah. So if you recall, the first financial bubble, I think, in modern history was the tulip bubble in the Netherlands, where people were betting their entire fortunes on tulips. Tulips are fucking useless. What can you do with a tulip? It's not remotely
nice.
Yeah, but you look also nice, Tim.
Yeah, okay, so, but I'm not branding for a whole country yet.
He's also not useless.
And he is also not a bubble. We can probably all agree that the practical utility of a tulip is probably not comparable to ChatGPT. And then we had similar things back in the financial in the subprime crisis. Like people were actually lending money to people who clearly could not afford this, and rebranded that as some kind of financial revolution. Not financial revolution, but like
some complex derivatives.
There's some very complex stuff with it, but branded this as a revolutionary, super safe, highly profitable asset class where every sane person could have just seen like, all right, okay, you're lending money to people who can never be able to pay you back. And so those are the things, like these super ridiculous things, at least in hindsight. That is something that, at least in my opinion, we are not seeing, or at least not yet seeing. Instead, what we are seeing is that we have technology where I think everyone can agree that it is groundbreaking, that it can do things that maybe even like 3 years ago we would have never thought that it would be capable of doing, and that we can all, like most of us can not imagine our daily workflows without it anymore. And that is things like anti-gravity, cursor, all these like AI-assisted IDEs, which really kind of remove the barriers to building software, or Lovable, one of my favorite tools. And we can actually have a look, because I brought that, at the ARR development of Lovable and Cursor. And Cursor is already pretty impressive, but Lovable is even more impressive. So these companies are making real money, and they are paying the foundation model companies. So there's at least some real money actually being made that goes beyond linke Tasche, rechte Tasche, and just moving it back and forth between a couple of Silicon Valley buddies.
Yeah, and you could argue one stat to also have some arguments for your side, that I just looked it up. Anthropic's, so Anthropic is also
it's a foundation model company, the one that develops Claude.
Exactly, and Claude Code, and they have mostly B2B revenue. I think it's 70 to 80%, and they've grown their B2B revenue from beginning of 25 from 1 billion to projected 9 billion end of the year. So, and B2B revenue, you could argue it's not just, I don't know, building some fancy pictures or videos that don't make any sense and fake the...
And maybe that's also the thing, right? If you look at stuff that Lovable or Cursor is doing or Claude is doing, that's not your standard ChatGPT bullshit where someone uses it as their own psychiatrist, right? It's really like, I mean, I think I used Lovable a few months ago for the first time. Was like, why should I hire full stack developers anymore?
There's still a few good reasons to do that, but but it at least removes the barrier to entry.
Yeah.
And then also, I mean, and we discussed this, was this last time or the time, like agentic measurement and our particular use cases at Funnel, and how we use Gen AI and agentic AI. So there are some so I mean, just today in the company meeting that we had, we presented that the onboarding of new clients based on the progress that we made, also based on agentic AI, can now happen sometimes within a day. So that what used to take, I don't know, a couple of days, now is done much, much faster. And so we have these productivity gains, but still I find it funny that so much of the GDP growth in the US and the leading economy in the world is based on investments in data center. Because one thing...
But those are also real assets, right? So these data centers are going to be there for a while.
Yeah, but then what happens if you have another DeepSeek moment and suddenly some really smart people outside of the US come up with models that don't need all of this data center capacity?
Yeah, but then you're going to burn more tokens.
It also
80%.
Right? But DeepSeek was built on those. DeepSeek was built on the other models.
but there's no guarantee that we need these data centers for, kind of staying on this trajectory of ever increasing performance.
It's not no guarantees, but mostly what's probably going to happen, at least to some extent, is that if tokens going to get cheaper, people are going to use more tokens.
Yeah, and like over proportionally.
Likely.
Yeah. So, but Tim Wiegels, you're supposed to be the skeptic. Like,
he just can't happen.
He is also an AI.
I can now say the data centers are great, but the data centers are also using shitloads of energy, right? I think that's also a massive problem that, we are not looking at this right now, but there was always this joke that Bitcoin actually uses more energy than Denmark or the Netherlands. And Gen AI will very quickly use more energy than a whole continent, right? And I don't mean Australia. And
good, but Denmark or the Netherlands also didn't deliver 10x returns in the last 10 years, right?
Have you had a frikandel before? No, but I mean, that's really the bigger issue, right? That there's a lot of energy going into this, and we also have to start thinking about whether this is really,
sustainable.
Is it ROI positive? Is it reasonable to pump all this energy in there? And I mean, Janos, you're right? Or Tim is right. Do we need all these data centers for the foreseeable future? I would say yes, but it's still not a good thing, because that means we will also use a lot of energy in these data centers. Because to be honest, if the data center is there, it will be used for something else, right? Then there will be the next fancy Gen AI model or AI model, or we will have the next yearbook app that builds even better pictures with cats on my back or something like this. It will be used. And I think that's also one issue, because the way people are using it is, I don't think, sustainable, or at least not yet.
You mean like the way, but is it related to the pricing or not properly, because we live in a, kind of market capture sort of phase of the development of Gen AI, where everybody's kind of dumping prices, and it's not, the actual costs are not really reflected in the prices, etc. Because
honestly, I think so. I think it can't be the case that the amount of stuff people are doing with Gen AI is really.
That's so weird, because just today or yesterday I had this thing like where I was using Gemini thinking, and thought it started thinking and and then I looked at my subscription and was like, this is really valuable stuff that it's happening right now. It would take me so much time and jumping between so many websites.
There we are with the productivity gains.
Yeah, but I would price it much higher, because it takes so much of my it gives me back so much time, and I don't know. But that was just like a very intuitive thing. I don't know if this even reflects reality, but
no, I don't think so. And I think it's really the case that people are using it for any kind of bullshit, right? That's going to be a problem. I mean, at first people are getting stupider. I'm not sure whether you've seen Idiocracy. I mean, it might not be the technical Skynet moment or the singularity. It will be more like Idiocracy, that people get stupider and stupider and stupider and don't think themselves anymore. That's one thing. And on the other thing also, same thing you just said. When I use Claude, for example, which is, I think with a Black Friday offer, €9 a month right now, that's a joke. Honestly, that helps me doing stuff I would have done in 2 days in half an hour.
Yeah. Or stuff you wouldn't have done at all, right? That's also like I always...
No. I mean, yes, and that's the issue, because there's a lot of stuff you wouldn't have done at all. I think that I use most of my Gen AI stuff for reasonable things, but I think that's...
but maybe things that otherwise wouldn't have been economic to do for you, or not.
Yeah, true.
Yeah.
I mean, a lot of these mega investments in these data centers, and Meta building a data center that has the size as Manhattan and stuff like that. And, these data center builders also thinking a lot about how to provide the energy. Some apparently use some illegal gas power plants that haven't even been registered correctly and things like that. They all kind of want to get to, and that's at least what they state. If you listen to people like Sam Altman, that they say they want to achieve AGI. That's the whole investment theory behind it. That at some stage, and we've seen that at the first chart, this singularity, achieving singularity, and the loss, money doesn't have any value anymore, and you don't really need to work because it's all robots, etc. But what if the current approaches don't even actually help us to achieve AGI? Like our large language models, which need these data centers and these highly scalable data centers.
I'm not sure if we should even be chasing AGI. Be careful what you wish for. No, I am becoming the skeptic. But we don't need AGI in order to make us 20-30% more efficient coding, or reduce waste here and there.
No, I'm not talking about us wanting to. I mean, these guys and these investment.
Yeah, they may not achieve it, but is that going to be so bad? Because what we end up with along the way is going to have such a large impact on productivity still. We just read...
but large enough to kind of, make it reasonable to have these hefty investments taking place?
I mean, probably. I think yesterday I read in the New York Times an article about Waymo. It was New York Times opinion, and the guy who wrote that...
Waymo being the self-driving car company.
Waymo is a self-driving car company. And Waymo recently released a lot of data on accidents and stuff. And the person who wrote the New York Times article, they made the point that Waymo is a clear choice now, that Waymo is much better for public health than human driving, because the data was so clear on accidents and all that stuff. So is having 80-90% less people dying on road accidents, is that worth the investment? Probably yes. Yeah. And I think we're going to see that in many more applications. It's no secret that both in the US and parts also in Europe, the health system is prone to collapse. It's about to collapse.
Now that we all kind of turning into AI fanboys, I have one last chart.
How am I supposed to be skeptic here?
One last chart that I brought in here is the Schiller PE ratio. I love this ratio. I don't know, you guys probably, everybody knows what a PE ratio is, the price earnings ratio, kind of explaining how the price of an asset or security is in relation to the earnings. And the Schiller PE ratio guy also won a Nobel Prize. I don't think for this particular ratio, but for some other amazing stuff that he done. that it's adjusted for inflation and extraordinary earnings, which makes sense, right? So if you and what you see here is that the PE ratio in the stock markets, I think I should have looked this up, it's probably the NASDAQ or the overall stock markets, but anyhow, you see it's on the second highest value since
the dot-com bubble.
The dot-com bubble. And it doesn't look like it's going down. It's just, 10% further growth, and then it's above the dot-com bubble PE ratio. And that could be, of course, a lot of these investments happening in NVIDIA and Google, etc., or a lot of the, are kind of related to their projected earnings. And if they keep growing like this, of course, it might be reasonable. But I thought this is quite interesting from a sort of investor. And if we talk about bubble bursting, the first thing where we'll see that bursting is on the stock markets, of course, and then it follows and ripples into
but I think at this point, even if there's a smaller, even larger contraction incoming or correction incoming, that is not something where we will see, all right, okay, we've been down the wrong path. We're not going to say, all right, okay, this was a bubble. My stock portfolio,
which was the same for the dot-com bubble, right?
Internet continued. Internet was here to stay. E-commerce was here to stay. So we're not going to say, all right, okay, cool, I'm going to go back to coding manually because my stock portfolio suffered a 20% hit.
No, of course. But then it could still be a bubble bursting. So that.
Yeah, but I think that's going to recover quite quickly if there's anything bursting. It's probably more of a contraction than an actual bubble burst because the underlying technology is just so strong.
And one final thing with the dot-com, from my side at least, from the dot-com bubble comparison, which I always find quite interesting. There's this concept of dark fiber that just before the bubble burst, there were like 95% of the network fibers under the earth were actually dark, so they weren't used. 95%.
Not the case anymore, right?
and that's not the case, and that's also not the case with the chips being like the chips are melting, and they're thinking a lot about how to actually secure the supplies, etc. So that's also different. The actual application of this new technology is pretty high.
But I mean, this is not being a skeptic anymore, right? Because to be honest, it's quite hard to be the skeptic here. But if you look at this, I mean, maybe you can also argue that in the late 90s, people were not prepared for the dot-com things or for all the dot-com news. And also, if you look at this, most companies that are really valuable today were also part of the dot-com bubble already, right? I mean, that went back up.
And made it through it,
The ones that made it through,
I mean, stuff like Google started later on. Apple was massively hit by the dot-com bubble and now is, the
fourth biggest most valuable companies,
Yeah, and I mean, that's the thing. Maybe nowadays, this is not a bubble anymore because we are prepared for this and we know what's happening. Maybe it's just,
So no skeptics here anymore.
No, it's to be honest, it's quite hard. I mean, there's a lot of things like this. As I said, the circular industry, which is weird. But to be honest, hasn't that been the case all the time that we have these circular industries?
No, I don't think to this degree, but
not to this degree, sure, but.
I mean, no, also not with such a massive usage of loans, right? But which is always dangerous. But anyhow,
okay.
So what's the verdict, Janos? You're supposed to synthesize points.
Am I? I didn't know this, but no, I'm still like I see. Yeah, again, I think that even if there's a bubble that's bursting, there will still be a lot of. I mean, we see it firsthand on our daily jobs that there's a lot of value and productivity to be gained. And even I just read it up because I had the past LinkedIn post. But even if you have crazy things that the annual depreciation of these data centers and chips, because you have to write them off, is not will always be much higher compared to the revenue that these companies make from AI and selling subscriptions, etc. So crazy stuff like that. But then is it just gonna be the prices are gonna be adjusted? Because I think many of us would also pay, instead of 20 euros per month, maybe 200 euros per month for a Google Plus or Google Gemini subscription.
No issue.
So I think that's rather what's going to happen, and we should just enjoy the benefits of this underpriced services for now. But as you said, like the technology is too robust and already too value creating. And also, if you look at it compared to maybe a year ago, how quickly it's improving. Yeah. But there are some bubbly factors in there. But yeah, hard to predict what's actually going to happen. The PE ratio, Schiller PE ratio, makes me a bit shaky because it isn't like it doesn't depend on a specific technology or anything like that. It's just like a more financial metrics, and it's quite high. But anyhow, what do you guys think?
Yeah. I mean, even although I'm supposed to be the enthusiast here, there's always going to be corrections. There was one with the terrorists. We recovered. There's going to be another one, and there's going to be another one. There's going to be another one. The question is really how fast are you going to recover from that? If recovery takes a long time, that's going to be a problem for quite a few people.
Yes.
That were banking their retirement on that were kind of also then, I don't know, need to sell their house and shit.
That's one interesting fact. There's this sort of, presumably this debt crisis where a lot of, after the last sort of bubble that burst the financial crisis, banks were quite highly regulated and it was much harder for them to give out loans. And now a lot of PEs and hedge funds, they are in the loan business and they give out loans and they are much less regulated.
Yeah.
And many of these businesses and data center builds up are also be funded by loans. So if they cannot pay back these loans, then you might have a triple effect, and that all leading to a lot of loans being defaulted on. So there's some other factors, just not just the technology not working, getting the productivity gains in. But so I mean, it's probably it's quite a complex system where a lot of things can go wrong. But let's see how it all turns out. But good discussion, guys. Let's see, so maybe in a year's time which predictions were correct, which weren't.
But I mean, for what you just said, right, that just tells everyone, diversify your portfolio. Don't just look at stocks, maybe also look at bonds, buy gold, all these kind of things.
Some old cars, some
crypto, real estate.
Diversify. Yes, exactly. Diversify.
Data center, real estate. Okay.
Cool. Then thanks everyone for tuning in. Again, just leave a comment on LinkedIn. Give us your subscribe. If you haven't subscribed to the Spotify channel, then please do that. And thanks, Tim. And see you all soon. Bye-bye.
Bye-bye.